Michael Wilkerson, founder of Stormwall Advisors, host of Stormwall.com, and author of Why America Matters. Welcome to the program. Great to have you on.
Great to be with you, Jack.
So tell us why inflation is rising right now. We're seeing prices go up along many arenas. What's going on here?
Well, Dick, one of the things that I've been saying really all year long is that we should expect to see a rise in inflation in the back half of 2023. Why? Because oil and gas prices were set to rise again. You know, when we had the peak of inflation in June 2022, we had 9% inflation. Oil was also at $120 a barrel. Over the last year, we saw disinflation, and it was largely because those oil prices were coming down pretty consistently, and we hit a low of around $67, $70 a barrel in June of this year. The reversal in prices began around that time. What's astonishing is that over just, let's say, 3 months, not even 3 months, we've seen oil prices rise by 1/3 to nearly $90 a barrel today.
And what's behind this? What's driving this? So we see oil is rising, but how does that connect to rising prices of food?
So when you see oil prices going up, and gas prices, of course, is how we experience it at the pump, well, oil prices impact everything that we do. It's not just the price we pay at the gas station, it's in our food. So 70% of all food deliveries in the United States are transported by trucks. Those trucks use diesel. Diesel prices, for example, in 2022 rose 43% nationwide, over 60% in places like California. So when you see those prices start to rise, and again, when we saw CPI last week, oil and gas prices, inflation, were up by 10% each. So what's really driving the inflation is oil. What is driving the increase in the oil price? Well, we've seen a couple of things happen. One, in spite of concerns about recession, the economies here in the U.S. and around the world have done okay. We've come out better than expected on the back of stimulus and otherwise. You've got China's economy reopening, demanding more oil. And at the same time, on the supply side, we've seen Saudi Arabia announce production cuts. We've seen, of course, sanctions against nations like Iran, Venezuela, and Russia restricting the supply of oil. And Saudi Arabia in particular has made a decision to turn away from the U.S. as its most important market and really begin to focus on China. Now, there's a reason for that. If you think about, on the one hand, we're their longest relationship, but on the other hand, when our government and governments in Europe continue to say, we're going to end use of fossil fuels within 10 years, it makes the Saudis and others question who will be their long-term friends, where will their markets be, and we're seeing a pivot away from the U.S. as well. We're seeing this desire to make sure that they have options outside of the U.S., and the sanctions regime against Russia have really alerted many nations around the world, China, Russia, and otherwise, to the need to find alternative homes, alternative markets.
And as far as the U.S., they're operating under the assumption that the U.S. will be able to operate without oil or gas. Is that possible?
Absolutely not. Our economy is today as dependent on oil and gas as it has ever been. The idea that we can just turn off turn off a switch and move away from fossil fuels, oil, gas, coal, and others to green energy is really a utopia. But it's not just a fantasy, it's actually an extremely dangerous one where we risk damaging our economy in a deep way. Look at what's happened in Germany. Through several years of moving away from coal and nuclear, completely caught sideways by the energy crisis last year as a result of the cutoff of Russian gas. Imagine if we continue to do the same thing in the U.S., just as through the years of the Biden administration, we have begun to close off access to fields in Alaska just last week, where those leases were annulled all the way back to January of 2021, when the Biden administration canceled the XL pipeline. All of these moves, and especially the regulatory red tape, the bureaucracy that keeps new refining capacity from coming on, keeps new production from coming on, hurts the U.S., hurts us in our competitiveness, and ensures that prices are higher. It's very dangerous for the U.S., for its economy, but also for its competitive position in the world of nations where we're competing with places like China, Russia, and elsewhere for resources, but also for influence around the world.
Well, with that, Michael Wilkerson, thank you so much for your time.
Great to be with you.